All right, welcome to day 3 of this series that is all about billing, insurance, credentialing, all that stuff. We've got Jeremy Zug, who is our resident practice of the practice consultant all around billing. He also is the co-owner of Practice Solutions, who's been a partner for a number of years now and does tons of billing for people. Jeremy, welcome to the Practice of the Practice podcast and this YouTube series.
Great, thanks for having me back. It's fun.
Yes. Today we're talking all about fraud, audits, and not screwing over your business. Not that we want to just do a bunch of fear tactics, but there's actually a lot of things that you can screw up and accidentally do fraud and audits. Where do we even start with this mess that you could create in your practice?
Yeah, so I think the first place that I always start, and I get asked about audits and fraud, and my background includes auditing and audits. And I think that the first place to start is to realize that audits, if you're not breaking the law, are actually a lot of fun. I think they're really enjoyable because it's sort of like arriving at a test and you're prepared, right? You've done your studying, you know what you're talking about. And so you're just going to go into this audit as a check and balance to your systems. Right. And so I think that's the first place to start is don't be afraid of an audit. Don't be afraid of any of these things we're going to talk about. Know that a lot of this stuff is fixable, and an audit should be, if you're not a criminal, right, should be an enjoyable process. How's that for a start?
Oh, I'm just thinking, like, what if you haven't done all those things? And like, I mean, I've gone to tests that I wasn't as prepared. Like, I fell asleep during my ACT the first time because I stayed up late the night before, and that was not the smartest idea.
Yeah. Well, that's true. And I think the first place to start would be to get your systems in order, right? Know what you need to do as from a contractual perspective with the insurance companies that you're in network with. Know what you need to do to stay compliant in your claim submission and in the processing of your claims, and then track everything, right? Track every bit of money in and out, keep all your PHI, protected health information. So we'll talk about some of that stuff, but I want to talk about what fraud really is as defined by the insurance companies and the government, and what the difference is between fraud, which is really an intentional action, and what a false statement is. So could we start there, and then we could go
I think that's a great, just so we're on the same page with it.
Yeah, so there are two concepts there, fraud and false statements. So fraud is the knowledge of a requirement to collect copays and deductibles and billing insurance only, right? That is claim fraud. That you know that you need to collect a copay, you need to collect a deductible amount, which we talked about deductibles and copays in the last series or the last podcast. And you don't, right? You knowingly, willingly don't make an effort to collect for whatever reason, right? That's absolutely fraud. On the other side, false statement is more unintentional, right? So billing insurance a charge, right, and failing to collect the copay or deductible is a false statement, right, regarding the charge. It's important to not do that. But it's less intense than fraud, right? So, but at any rate, so if
really similar, so dissect kind of the major differences.
Yeah, so major difference. One is very intentional and malicious. So I know that my patient owes $20, but I'm not going to do it. I know that I need to collect it. I know I'm required to by insurance or by Medicare, and I'm just going to write it off because I can. That's very clearly fraud. In the sense that I'm just going to screw over the insurance company for cash, and I get to offer free therapy to my patients, right? It's very, very, maligned toward the insurance company. The other one is I know I need to collect it, but I've failed to give a reasonable effort to collect a copay or deductible, or I'm forgetful about collecting, or I drop the ball sometimes and then don't, right? So the second one, a false statement, is less malignant. It's more sort of casual. Maybe the right term would be absent-minded, right? around collecting a copay or deductible. And so those are the two really big differences. The insurance companies and the government will see discounts around copays and deductibles as both fraud and a false statement. So there is sort of a middle ground there too, where let's say that I know that you have a $20 copay, but I'm only going to charge you 10, right? That is both fraud because I have a knowledge to collect, right? But I'm not going to collect everything, and a false statement because I'm failing to collect that other half, right?
So, and you may not know the case law for the people that they've been able to prove were committing fraud, because that sounds like the worst of the two. What was different about them? Because I could see, someone just kind of claiming absent-mindedness when maybe they did commit fraud and it was a part of their practice. Like, what are kind of indicators that prosecutors look for that people can avoid doing?
It's a really good question. So a lot of that comes out in...
Also, Jeremy is not an attorney, nor am I, and you should consult your own attorney.
Yes, you should. Or just collect copays and deductibles.
There you go.
So a lot of that comes out in an audit, right? Where they really gauge what the situation is. But claim data, so if you're submitting claims to the insurance company, that doesn't just disappear, right? Insurance companies are really, really good at data and looking at trending for providers. So there was the biggest fraud case found this year for Medicare, and it wasn't mental health related because I saw the headline was like, oh my gosh, who is it? But it was actually for like a hip replacement. It was like for a company that provides medical equipment, and they only found this company because they saw the claim data. And they were seeing that, well, the way that you're billing does not indicate correct practices, right? And so they're going to audit you and find out what exactly is going on. And they were fined $1.2 billion. So, that's a lot. But typically they're going to look at, what services are you billing? And they're going to, in an audit, they're going to look at, are you collecting from your patients, right? And typically the profile of somebody who, knows that they should collect and doesn't is pretty evident. That person is typically very adamant that they're not going to collect from insurance. I'm not going to take credit cards. I'm just not going to do it. The other person is also more evident in a audit. I don't know if that answers your question, but
no, that really helped. So as we kind of look at just other things that you need to have locked down in regards to fraud, audits, and not screwing over your business, what else should we cover?
So a couple of things. One, fines for fraud can be hefty. So they typically start at 10 grand per date of service or per occurrence. So a couple of things. One, you just want to make sure you're collecting copays and deductibles. And I know this, and Joe, perhaps you could speak more to this than I could, because from my perspective, it's just business. But I know that there is a tension between, well, my patient is hurting or can't afford it, or what have you, and actually collecting that money. So maybe, Joe, you could speak a little bit to how to file that in the mind of a therapist a little bit better than I could.
Yeah, I think it depends on your comfort level in a lot of ways. So even my own therapist that I go to, we never talk money. And so I just get, a thing from, I think it's payyourdoctor.com or something like that. And, it says the insurance covered X number of dollars. Here's the negotiated rate. And, I pay it through the website. Now, for me, as someone who pays his bill, that's great for my therapist. But being that we never have the conversation really, if someone doesn't pay it, like, I don't know how that kind of shakes out for him. For other people that want to make sure that that's done right away, I think having some very clear triggers as to when the session is ending, and that's true whether or not you're doing money, but, grabbing a receipt from, an envelope, or grabbing a receipt, that is in a basket next to your chair. I had a standing desk, so I would physically stand up and, have my computer and we'd schedule the next session and then we'd pay. And so they knew when I stood up that we were going to start scheduling and they'd pay for their session. So I was 100% private pay. So people just, paid every session.
Right.
Or I didn't get paid. But I think having that routine as to, how do you wrap up the session also helps land the session. If someone dives into something in the last minute, and we've all had that person, to be able to say, that's a great starting point for our next session. And then you kind of stand up to go do the scheduling. That then has been sort of a trained thing that now we schedule, then we pay, then we say goodbye.
Yep.
So I think it's more just being able to figure out for you what works for you. Other people, may have, you do your scheduling for your next session with a receptionist. On the way out, you also pay with them. So that may be your comfort level. But having a regular routine, I think, is really important in regards to the flow of payment.
Yeah.
And to see what's working. I mean, if you're sending the bill in the mail, you only have 30% collections. Like, that means you're donating your time 70% of the time.
Well, that's exactly right. And I've had providers or therapists actually yell at me for suggesting that you keep credit cards on file, right? Because and part of that is they care about their patients and they don't want to add a financial burden, but it's really important, right? And I think that on this topic, it's important to note that the fines as claimed by the insurance companies and the government are hefty. But there was an article published yesterday by ProPublica. I don't know if you read them, Joe. But the headline is, "We asked prosecutors if health insurance companies care about fraud. They laughed at us," right? So part of that is health insurers don't aggressively pursue widespread fraud, which makes it really easy for scammers. And so more often than an audit, right, what will happen is you'll see your premium payments go up in your area, right? Which is more common than not, right? Where insurance companies are looking at the flow of money from a macroeconomic perspective into a certain market from the insurance company for services versus from patients. If those two numbers don't line up, they're just going to increase your premiums to make up the difference. And so that's a really, not only for the fraud piece and compliance to your contract, but it's also a really important economic variable for keeping your premiums as low as possible. So it's the folks that are committing fraud and false statements that contribute to rising premium costs, right? And I think we like to, attribute that a lot of the times to the government, which is, that is certainly a variable. But this, more often than not, also increases premium amounts as well.
Yeah. We'll link to that in the show notes. I'll have Jeremy send me a link to that article so we can make sure that ends up in the show notes as well. Yep. I had a question, but I forgot what it was.
So if we could talk about audits maybe, and then if you think of a question, we can go from there. So the reason why I'm not afraid of audits, generally speaking, is because audits are all about what you can prove and not what you believe, right? So if I can prove that I had a session on 9/10 and I collected from my patient on 9/10 and the insurance company paid me on 10/10, it's all good, right? I can produce my explanation of benefits, or EOB, right? Or my electronic remittance advice. And I can produce all of this documentation to show that I'm in compliance. You win the day every time, right? And the way that auditors tend to work is they will sample some of your patients. So there's no way to know that they're going to look at this patient that has a perfectly clean account versus this patient that's kind of a mess, right? And their billing is a wreck. They're going to sample some, and if they find issues, auditors will dig in deeper. So when I did internal or external audits, what I would do is I would sample the same thing. I would go into an organization and say, produce these documents for me. And if I found issues on those documents, I would look deeper. And more often than not, you find a lot of problems when you do that. So if you're able to set up your systems in an airtight way so that you're collecting everything you ought to be collecting, when it comes time for an audit, it's really easy to just produce those documents. And you really become nothing other than a glorified cleric that, produces documentation for an auditor. And when you get there, then that's a really fun place to be because they're looking for problems.
Now, for electronic health records, does all that typically stay kind of within it so that you can show all that?
Totally. So like if you use therapy notes, you could, and you go to the billing tab at the top and then click on ERA, you can produce all of the ERAs that you've ever received. And then those tie into all of the dates of service that they apply to as well. So an audit with therapy notes would be extraordinarily easy because you could produce line by line, date of service by date of service, in antiquity past, that I've collected everything I should. So,
As you just said that, I'm going to ask you a question that's
yeah.
off topic, but not. I remember in I think it was middle school when I was playing a lot of Tetris when it first came out. I would have dreams about Tetris. Do you have dreams about therapy notes?
Sometimes, sometimes I do, and it's that's kind of a scary thought. I actually had a dream about therapy notes the other day that
Do you bill for that time?
What's that?
Do you bill for that time?
I did, yeah. But yeah, it is kind of like a game, though. To me, anyway. I think that if you have the pieces lined up, you should be set, right? But
Yeah.
if say you're operating on paper, or that you tend to be a little more scattered, audits would be a very scary thing for you, because you're not really sure what to produce, right?
Yeah.
But if you think about your practice, so like zoom out from your practice for a minute, and don't think about perhaps the emotion that went into building your business, right? Because there is something there. It's incredibly meaningful. But if you think about it as a system, as an ecosystem, if you can think about, do I have every element, every category, every silo in my business documented and optimized, and I can do any kind of quality assurance check, right, at any random point, and know exactly what should be there, you'll win the day on this stuff every single time.
Such good advice. So we have a billing webinar that's coming up on November 6th at 3 o'clock Eastern, 2 o'clock Central, 1 o'clock Mountain, and noon Pacific. So you can sign up for that billing webinar over at practiceofthepractice.com/billing webinar. Also, if you want to chat with Jeremy, if you are doing your own credentialing, if you are doing your own billing, or if you're a much larger organization that wants to outsource or insource your billing, he does trainings on that too for mostly 6, 7, and 8-figure practices. But reach out to Jeremy over at practiceofthepractice.com/Jeremy and have a conversation with him, and he'll let you know kind of the best course of action in regards to his consulting and training. Jeremy, tomorrow we're talking all about tech in billing to save time and money. So looking forward to that. We'll chat to you soon.
Thanks,
Chat with you soon.
All right.